Welcome back to the show, everybody. Check out these headlines here. Russia and China payment breakdown. The Bitcoin ban is back on the table, and it's not just in the EU, ladies and gentlemen. IMF Director Augustine Carstens, you're going to want to know every bit of what they're talking about. And also, we're going to discuss evidence, the weapon of this case, the SEC versus Ripple. Is a settlement off the table, or is it imminent? Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at Dig Perspectives at the top of the screen. Everything that we're talking about here today, it's $1.843 trillion market cap for crypto. April 22nd, 2022. Good afternoon. The market is still down a little more than 4% right now. Bitcoin below 40,000 at 39,500 plus. Ethereum under 3,000 at 2,900 plus. In XRP at 72 cents. Falling hard going into the weekend with the entire market here. 72 cents on the bottom, 76 on the top. We'll keep an eye on price. Ladies and gentlemen, I'm diversifying. You can do what you want, but I'm letting you know I'm diversifying. I'm spreading out. I love crypto. I love the high risk investment. I absolutely, I'm obsessed with it. I'm drawn to it. But I'm also drawn to hedging, because of the inflation that has kicked in lately. And it is gold for me. And I do that through Glint Pay. Gold is security. Glint, it's key. I tell you right now, buy, saves, and spend and send gold and dollars. However you want to do it. I'm accumulating gold on my card. It is a debit card, which you can spend anywhere to hedge that inflation that you're suffering. And I tell you, I just love being able to do it. And it is physically allocated gold to you. So know that going into it. Link underneath the video if you'd like to check it out. Take a look at this because of the Russia-Ukraine war, there was a connection between China and Russia, a huge supply trade line and all of that. But you know what? There's been a bit of a fallout here lately. The Kremlin has hopped to strike a deal with China's Union Pay system as an alternative to the Visa and MasterCard payment system and to get around the recent ban and sanctions that have been put in place. However, Union Pay yesterday unexpectedly pulled out of the talks with Sberbank and the other Russian financial institutions on the West economic blacklist. In other words, China says, we don't want to stand too close because we don't want to run the risk of getting hit with any kind of ban or restrictions just like you. That's where it's going right now. So they're not happy about that. And what's going on this side of the world, on this side of the pond, I can tell you that Jim Rickards, economist and CIA employee at a time, is in historic Carlisle, Pennsylvania, and he's there to lead a financial war seminar at a U.S. Army War College. That's what's going on today with Jim Rickards. Now, we know Jim Rickards has been a part of these financial war simulations and things of that and models in the past with different three-letter agencies and so on. And here he's doing it again. Now, I don't say this to be an alarmist. These things are held all the time in very normal fashion. However, understanding the dynamic of what is taking place globally with the conflict with Russia and Ukraine and understanding the economic despair that exists across the entire planet, for which we're going to hear just in a few minutes from Kristalina Georgieva, the IMF managing director. And we're also going to hear from our U.S. Treasury, Janet Yellen, and none of it is impressive. I must warn you ahead of time. And neither is this. This is from Bitcoin Miami here. And Senator Loomis is asked here by Kraken's chief legal officer about Bitcoin. Listen to this.
Specifically Bitcoin and crypto broadly, it's still not a bipartisan issue. Do you think we're headed in the right direction, or is this doomed to be a polarized partisan discussion?
I think we're heading in the right direction.
That's what she says. She thinks we're headed in the right direction. Well, I tell you what, she might want to pick up some newspapers. Because take a look at this. Behind closed doors, European Union officials talk about banning Bitcoin. The documents obtained through a FOIA request, right? Check this out. If Ethereum is able to shift, talking about shifting from proof of work to proof of stake, we could legitimately request the same from Bitcoin. We need to protect other crypto coins that are sustainable. Don't see need to protect the Bitcoin community. Certain fuels or cooling from data centers were prohibited under environmental acquiesce. It says here, those production methods were prohibited due to their environmental damage, which services does Bitcoin offer that Solana does not offer to society. If you can prove that, other cryptocurrencies can operate without POW, proof of work, then why can't Bitcoin? Now, you know, it doesn't stop. That's the EU, ladies and gentlemen. But guess what went on today? The U.S. House Democrats are zooming in on crypto mining and its environmental impacts. Sweden and the EU considered a POW ban and more. So now the U.S. has got it on the table again. I said this not long ago, and I'm going to say it again now. This is why Ripple's Chris Larsen has come out of the shadows from late last year up until today and just a couple weeks ago, saying Bitcoin should switch to proof of stake from proof of work. And I believe that he said this because I don't believe that somebody as successful or as wealthy as Chris Larsen is would come out here urging for that major change to the network, not knowing that there was some real political rally behind this idea of energy consumption and going green. You know, when I spent time at Bitcoin Miami just a couple weeks ago, I see these huge shipping containers that have been converting into mining units. 20, 40-foot long containers that have these mining units in it that plug up to electricity, and you just suck the electricity and mine Bitcoin. The thought that's coming over me while I'm standing there looking at all of these shipping containers worth of these mining machines inside of it, I'm thinking to myself, as I know others were, it's not even necessary. We have many networks out here where that's not even necessary. Think of it for a moment. Think of it. Would you continue to use something knowing that you don't even need it? It's not even necessary. The technology out here, again, I've equated this to the first cell phone. Would you be using the first cell phone knowing that we've got the new iPhones? It probably doesn't even work properly if you had the first cell phone on any of the networks that are built out here now, towers included. So, you know, there is something to be had here, and it is not over by a long shot. We will pay very close attention to this. And here we see here the U.S. Treasury Department has identified 3 new Ethereum addresses used by North Korean hackers to launder proceeds of the Axie Affinity Ronin hack. Well, again, I have to ask and raise the question, why was the first ever initial coin offering, Ethereum, never really given the proper treatment for full public disclosures, a public audit, because it was the first ever ICO? Why did that not happen? Why was William Hinman able to go out and give what the SEC now proclaims in the SEC versus Ripple case was his personal opinion and not the guidance of the agency or the corporate finance division? How come William Hinman is still walking around free today? Because if in fact it was, as has been determined through that court case, it was William Hinman's opinion, it means William Hinman has done something for private gain and made $15 million through Simpson Thacker that also represented EEA, while he benefited and used his power and position from a public position and public chair at the SEC Corporate Finance. You tell me. Well, I'm not so surprised this Ethereum network was used to do these things. And I know there's a lot of you going to say, well, they could use anything. They could use Bitcoin. They certainly could. But here's the one thing you can't say. You don't know enough about Ethereum and their investors to even be able to legitimately say that the network is actually decentralized, because they've never had a public audit done. And we know that Joseph Lubin explained to investors how to disguise their identities. You tell me where that's legitimate, and we'll move forward. Speaking of moving forward here, this is major news from Jeremy Allaire and Circle, and it's more good news for the unofficial, I call it, U.S. digital dollar for consumer use. It is the USD coin. That is my speculation, and I've been saying it for probably about a year almost now. Today, for mainstream adoption of the USDC, with Stripe announcing crypto payouts with the USD coin, launching with Twitter as the first pilot customer. It's rewarding to see some of the most important internet companies in the world using Circle. Goes on to say here that a long-held promise of digital currency like USD coin has been removing friction and enabling anyone anywhere to easily receive payments. Twitter creators exist everywhere. The internet exists, and the existing payment systems are expensive and complex. To reach people easily, the USD coin provides an open platform for connecting people with value, with Twitter users able to bring a digital wallet and receive payments by building on the USDC for Polygon. It allows for large-scale transactions at pennies cost. Yes, crypto payments can reach internet scale. Having one of the most important payment companies in the world, Stripe, adopting USDC is an indicator of things to come, and it certainly is. We, Circle Pay, share the mission to grow the GDP of the internet and believe USD coin is going to become a key building block for internet commerce. And I believe it comes the stablecoin public-private relationship for the U.S. government. That's what I believe. Looking right here, we see this is quite embarrassing right here, ladies and gentlemen. The IMF director, Kristalina Georgieva, says we didn't think through the consequences of printing too much money. We are already out of time. You didn't think it through. What is your job? I'm just curious. You need a minute to think that through? You know, this is the kind of stuff here that just doesn't work. You know, I've said this many times, and I get it from my father. God rest his soul. But if you need me to be the idiot in the conversation, we're going to have trouble every time. And this is what's going on right here. You didn't think through. Your job is to think it through, right? The consequences of printing too much money. But what the excuse is it's always, we did it for the children, right? We couldn't stop long enough to think about the prolonged damages of it, right? The reality I feel here, my speculation, is that they knew exactly what they were doing, and I'm going to prove it to you. I'm going to prove it to you with Augustine Carstens here from the BIS, and he's going to tell you with his accent exactly what they've done and what's going on. And I believe what he's going to explain to you in a very, very high altitude way, he is going to explain to you that they are switching to a new financial system. And the only way to do that is for everyone to develop their own central bank digital currency, because they're not going to watch their self become irrelevant through innovation and the growth of the digital asset space. Oh, no, 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 no. In fact, I believe that's why they printed all that money. They printed all that money because they're pricing in the bankruptcy of the globe and the United States, because they know they're going to be moving to a new system. And I believe a lot of that system is going to be connected to Ripple's private ledger for central banks to launch these central bank digital currencies. But first, let's hear from Augustine.
In particular, central banks and financial authorities should pay special attention to two aspects. First, to the ties linking cryptocurrencies to real currencies.
There it is. There's the first thing. Pay attention to the ties that connect cryptocurrencies to real currencies. That's CBDCs. That's stable coins. What's the executive order for the United States on right now? Those exact areas, right? So now keep listening here.
To ensure that the relationship is not parasitic.
To ensure that the relationship's not parasitic. Why is that important? Because you're not going to allow, as a bank, they're not going to allow these stable coin companies out here, private companies, to just issue money and compete with the real money of the world. They're going to create whatever regulations are necessary to force them to be inside the framework of the banking regulation and currency regulation. You watch.
And second, to the level playing field principle.
Level playing field means that we're going to level the playing field, and we're the people on the field. They've been the players on the field, and they're never not going to be the players of the field. They're being forced to do this because of the Bitcoin era and creation of crypto in general, but they see the writing on the wall. They will not become the music industry as it thumbed its nose to digital file sharing, and then the music industry was collapsed. No. They've learned from that example, and they will launch their central bank digital currencies, and they will force private stablecoin companies to be held to a heightened supervision, and they will remain relevant in control and powerful.
This means same risk, same regulation, and no exceptions allowed.
Same regulation, no exceptions allowed. He's telling you right there exactly what I'm telling you. The Ripple private ledger for central banks, I think is going to play a huge role in this as we see it unfold. My speculation. Right here, we see JVXRP. I told you to follow him. He says, so if the SEC already analyzed XRP under Howey, which they had a long time ago, how are we here today in this case? And John Deaton says, Jay asked $1 billion question. The June 13, 2018 XRP memo did not recommend enforcement. That means one of three things back in 2018. The SEC lawyers concluded it was similar to ETH, a security early on but not today. 2, they can't satisfy the Howey test. Or 3, it's inconclusive. So how are we here today? And it gets even more confusing because when you go back to 2015, when Ripple actually was fined by FinCEN, there's more evidence to suggest that the government in the United States understood XRP to be a virtual currency. Take a look at this really quickly here. For more evidence showing the SEC lawsuit versus Ripple was a weapon because there's simply no other logical or legal explanation, is the 2015 FinCEN DOJ settlement with Ripple. According to the settlement, Ripple had to register with FinCEN, not the SEC, and they did. Everyone knows that part already, but what I didn't realize until he was told by this gentleman right here, Tiger Mike 15, Tipsy Tiger, pointed out to him, was that Ripple was still providing both FinCEN and the Department of Justice independent audit reports of XRP sales until 2020, the year they were actually sued. You can read for yourself that Ripple was subject to external audits and requirements and clauses of 2015 settlement from FinCEN on declared XRP a convertible virtual currency. Most of us do know that. The auditor was required to provide 3 independent reports during a 5-year period, which they did, 2016, 2018, and 2020. Each report contained a minimum of 6 months transactions. These reports of XRP sales went directly to FinCEN and Department of Justice. Think about that for a moment. If transactions were suspicious or nefarious or illegal in any way, wouldn't a regulator report that activity? Would government regulators allow open and continuous sale of unregistered securities for 5 years? Maybe you think it was because the agencies don't share info, but in 2006, FinCEN and the SEC announced a collaboration, an information sharing agreement between the agencies. In addition to that, it is a joint statement dated October 11, 2019 between FinCEN, CFTC, and the SEC related to digital assets and banking secrecy laws. Clayton was chairman of the SEC. The bottom line is that Ripple and the Ripple settlement in 2015 was the first time the U.S. government regulated a cryptocurrency, and that cryptocurrency was XRP. And it classified it as a virtual currency, not a security. Ripple was forced to comply with banking laws, not security laws. Afterwards, an independent auditor approved by the Department of Justice provided extensive reporting of XRP sales directly to FinCEN, DOJ. All was good until June 13, 2018. SEC lawyers analyzed whether XRP was a security under Howey. In the end, they did not recommend enforcement. So again, I think, I firmly believe that this case was used as a weapon. I also tend to believe that this case is a real application at the same time of the Reeves test. When something is a note, remember, something can be a security and it doesn't mean it has to be a share of a company like Ripple. I certainly do not believe that XRP is a share of Ripple. It is not. There are shares of Ripple and you can get them on link2.com. The reality for me is that I think there's a couple different levels of perception here, and I'm going to wrap it. The real deal for me is that I believe people are people, and people, when they know things, I believe they make decisions that sometimes it's not the best decision. And I believe they made the decision of greed. I believe they understood that even though there was a decision with FinCEN and Department of Justice, in order to properly clear this asset, XRP would have to go through the legal process being sued by an agency like the SEC, because then it becomes the real application of the Reeves test. When something is a note, whether it's a security or a non-security note, don't believe it, but these words have come from Gary Gensler's mouth. When something is a note, I've played it on the show many times, put it in the search box of my playlist. Hester Peirce has even brought up when something is a note. So it's not just about the Howey test. I encourage people to think of this and then think about the fact that how was this case used as a weapon? Well, if you understood that you were in the SEC and you, in fact, were going to have to sue because you knew that this asset needed to go through this case, maybe, just maybe, the greed inside you couldn't look the other way. Maybe, just maybe, you saw the advantage of working or giving a helping hand or writing a letter possibly for someone like Ethereum and Consensus and all the disguised whales behind it. And maybe even one of those disguised whales was yourself. That's going to do it for me. Make sure you hit the like and subscribe, leave a comment below. There are more questions than there are answers, and we've been in this thing for a long time, but we're not going to stop until we get them and we get a level playing field. Make sure you check out all the links underneath the video. I'll catch all of you on the next one. Oh, by the way, if you are an XRP developer or a developer familiar with the XRP ledger, keep this in mind. I have a friend of mine who is looking for someone who can build NFTs with the new XLS20 token to real-world assets on the XRP ledger, preferably if you're in the US, but not limited to. So if you have any experience in being a developer and wanting to work on the XRP ledger to build NFTs there, this is a heck of an opportunity. Reach out to me at digitalperspectivesnews@gmail.com. digitalperspectivesnews@gmail.com. I'll catch all of you on the next one.